Good morning, everyone. This is going to be short. It's just welcome. This is my first event of FinTech Week. So welcome to FinTech Week. Welcome to SC Ventures. Thanks for joining us. For those who don't know, SC Ventures is a business unit of Standard Chartered. We incubate ventures, create new business models. We have set ourselves to rewire the DNA in banking by doing that. We also invest and deploy a bit of money, deploy capital, but only in the partners we work with, be it in the context of the bank or in the context of the ventures. And we've been doing all this for a little over 4 years now. So we're still very young, very nascent. But this is after some time doing this, we've come to appreciate as we build ecosystem, kind of the richness of the partnerships and the people we work with, be it in the fintech space, be it just other partners who are either helping us or building things with us. And it's these weeks are a really good opportunity to not only showcase what we're doing, but also simply say thank you to all those who are on that journey with us, trying to do something really important and which we think is really worthwhile. So thank you for being here. Without further ado, I'll turn over to Priya, who's moderating our first panel, and we'll take it from there. Here we go.
Thanks, Alex.
Like this? In between?
Yes.
Okay.
Yeah, in between.
Yeah.
Perfect. Let's do like this.
Hi guys, morning. Thank you all for joining us. Without further ado, I'm going to kick off our first panel for the day, which is really on venture building and how do we transform business models with this as a strategy. I would like to say a welcome and thank you for our really distinguished panel for joining us. Christine, who leads venture and venture capital for EDB, Harald, who runs our venture building function at SC Ventures, and Caroline, who leads ENGIE Factory for Asia Pacific. Thank you, guys. So why don't we just get started with our first question. So, corporate venturing, right? It's I think it's almost become table stakes. It's a necessity at this point. I think there was a fact that I read somewhere that companies that invested in long-term diversification outperformed companies that didn't by 54% in shareholder return. So as we think about venture building as a strategy, what do you think is the role that it plays and how is it best leveraged to meet transformation goals? Harald, I know you and I had a conversation about this last week around venture building for product innovation versus business transformation.
Yeah, thanks, Priya. So maybe what I can do is just start with explaining our journey and how we came to becoming a separate business unit of Standard Chartered. So we started off as the innovation arm of the bank, and realizing that if we needed to have an impact, we actually needed to completely rethink the way that we were going to operate. That means setting ourselves certain KPIs, financial KPIs, but also tangible ways of measuring how we innovate and how we have an impact on the ecosystem. So the way we started is we started doing innovation for the bank. We have a unit that now we call the Accelerator. It involves educating the bank on practices to change the way they do their business in a more customer-centric way, and also providing them with a tool, the resources, the people, so that they can do so. And so being really a utility for the bank itself. The other aspect which we also did was invest in disruptive ventures that we thought were going to have an impact on the mission that Alex spoke about, which is rewiring the DNA in banking. So which are the ventures out there, the fintechs that we think are going to help us serve that mission for the bank, but for society in general. And the third one, venture building, is really thinking about different ways of doing the business And we think that this way of doing business is better served outside of the core business. We set up with a simple idea through the process of ideation, incubation, and so forth. We will grow this simple idea into more, into a project, into a business, finding CEOs, finding potential investors, partners, and so forth. So as you can see, we started with innovation and we turned it into a very tangible way of measuring how we contribute to the business.
Thanks, Harald. Maybe I can look to Christine to add to that as well. We're sharing mics today, guys. Thank you.
Yeah, we have a range of audience here. So if you are at the stage of why venture building for corporates, maybe let me take the perspective of a government agency. I'm privileged enough to be associated with an organization that's been at the forefront of building the Singapore economy since it gained independence. Their strength is really global networks, long-range planning, and strong execution. And around about 2015, 2016, I wasn't in the picture. The part of the long-range planning saw that by 2027, a S&P 500 company would stay at the S&P 500 list for less than 12 years. This number was 60 years in 1950. So the economic model of the Singapore economy needs to change, fundamentally change. And we ask ourselves, how do we be at the forefront of being involved with new high-growth businesses? And that started a journey of going around the world. They interviewed close to 150 companies, asking them, what are you doing about it? So venture building or business building, new business creation was one of the top 3 priorities for growth out of about 50 to 60% of that 150 global MNCs that they interviewed, and that started the journey. Fast forward, we asked ourselves, what are the key elements? If companies are already doing it or are thinking about doing it, what then makes Singapore a great location for them? We can spend the rest of the panel talking about it, but it's really combining the best of the corporate world. We still think that corporates can do it. In fact, we've done quite a number of studies that shows that about 2/3 of the large viable businesses that were built in the last decade had involvement from corporates. Some of them started it, some of them invested in it, and some of them were pivotal in growing it to a stage of $1 billion companies. So with that as a backdrop, and also the growing innovation ecosystem in Singapore, the strong funding landscape, the access to entrepreneurial talent, we thought that it was the right time and location to encourage corporates. We've been on the journey for 3 years now. We launched 4 years in stealth mode. I recall my very first corporate venturing event. We had only a handful of 10 companies in a small room like that. Today we have about 80 companies in our closed group community talking, exchanging notes about corporate venture building. We have more than 40 ventures that are created, built and launched in Singapore. Some of the examples include Pelago by Singapore Airlines, Jiva Terrascope by Olam, and many more. And we'll be happy to share how EDB helped them in their journey.
So hi everyone, because this is a fintech crowd, I'm just going to quickly introduce ENGIE. So ENGIE is a global utility and energy service company. It's operating in about 70 countries, has about 100,000 employees across the world, which means that it's a massive dinosaur when you want to do innovation. And we're organized in regional hubs. And so within ENGIE, I'm running the venture builder of ENGIE Factory here in Asia Pacific, which is actually the only model for venture building across the group. So we build it a little bit in the same way as Harald, trying different things, accelerator programs, scaling up partnerships, then landed on venture building here in the region. And now we're starting to scale that up across the group, which is a really interesting opportunity. But saying that, I still believe that ENGIE should continue, and is definitely continuing, doing a range of projects across working with startups. So we have a global VC which is investing in more mature startups. We've got an innovation team which does a lot of entrepreneurship, which is very valuable as well. And then here we focus more on venture building, which is essentially building the startup from scratch in terms of deploying new customer segments or new business model innovation. The journey started about 4 years ago, I think pretty much around the same time.
We all started.
I think the three of us were having drinks in cafes here and trying to sort out like how can we add value
It's
in
much more professional.
the vendor. Yeah, exactly. Much more professional than that. So it's nice to see each other 4 years later. We definitely went on that journey thinking we want to build unicorns and new businesses, but we don't know how to do that. And then now, 4 years down the line, we've got about 10 startups up and running in the region. A few are raising Series A. So the vision has unfolded into concrete projects, which is very exciting, and I'll look forward to speaking more about that.
That sounds great. Thank you. So obviously a ton of great experience here in setting up venture building. I'll come back to kind of an original question that I had, which is how do you leverage venture building as a strategy, or when do you leverage venture building as a strategy to drive transformation? Versus driving from within, or do you have any perspectives on how corporates should be thinking about it?
I've got the mic, can I?
Yes.
So a couple of years ago, actually it started in 2016, where ENGIE set very bold targets to start becoming a leader in the energy transformation, energy transition, and decarbonization. It was relying heavily on coal, so we had to divest a lot. But then the CEO basically set the group onto a very strong innovation path, asking us to explore the future of business models, realizing that actually unless we innovate and we try new things, we'll be redundant and won't move ahead with the future we want to see. So in terms of strategy and vision, we came in at the right time. Like all the doors were open. We didn't have to push-pull to change things internally. Now the other approach that we take is locally and regionally, we work with the different business units. We always find a sponsor who's part of the business and who brainstorms topic with us. And we take a vision approach. So we look at where do you want to play in the next 10 to 20 years? What is it that you're going to be doing anyways? What is it that you're not going to be doing because it's too risky, you don't know how to get there, or you feel the market is too small for the corporate to actually get down that path? And we love taking all that pipeline of things that they wouldn't do, and we turn that into business opportunities. So a couple of years ago, ENGIE telling us we want to be part of the EV business in Singapore, but we don't know where to start. And we launched a venture, which is now positioning ENGIE as one of the leaders in charging stations in Singapore. So that's the stuff that we find exciting.
I guess, similar journey for us. We need to help the bank transform itself. But at the same time, you don't want to disrupt it completely because you need that core business to continue in order to drive revenue and keep on serving your customers. But at the same time, you know that the industry is completely shifting and completely changing. And not only do you want to benefit from it, but you want to be an actor of change and enable that transformation of the industry. So venture building serves the greater purpose, but at the same time, enabling it outside of the core business, providing optionality, in our case for Standard Chartered Bank, and really testing business models. Obviously, with a big vision, as Caroline said, for us, it's a vision of rewiring the DNA in banking because we feel the big banks have lost a little bit their relevancy to society. And so how do we do that? Through understanding the big themes that we want to be a part of. In our case, we have 4 themes that we look after, from world trade, SMEs, digital assets, online economy, sustainability, which is something we're doing through partnership in the ecosystem. And as Caroline said, really just testing ideas in a very agile way until we feel confident enough and we feel we have the right team, we have the right solution, we are answering a true business model, and ultimately we're convincing other people to be part of that journey on the cap table with us. And through the series of funding, enabling it to become a real interesting solution that will have an impact on society. So I think that's the intent.
And I think for my organization, having the privilege to work with your two companies, we learn about best practices. The first thing is you need to assess whether the company is venture ready. And we look out for what I call preconditions of success. The first is really about leadership commitment. We think that venture building takes a lot of commitment, it takes a whole village, it takes resources and not just capital, but different resources from different parts of the organization. We've seen companies stop during the COVID period, and it's really disruptive. So we look out for who is the most senior sponsor, whether there is that vision to continue, and why the strategic mandate. Then the second one is the how they go about doing it. We much prefer model where dedicated teams focus on doing venture building, whether it's outside investments or inside out venture building, just because it requires a very different mindset, skill set, proactive approach in managing the ventures. You can't kill a venture the day it doesn't meet its revenue metrics. We don't even talk about revenue metrics on day one of a very young startup. And the last piece is that I think why we believe in corporate having an advantage in venture building is the inherent advantages that they can lend to the ventures and how they go about unlocking it. And it takes a very delicate balance to have individuals or teams who know the organization well, but can also strike the balance between pulling the advantages but not have the, forgive me for saying that, the corporate bureaucracy way down on the venture. So these are the three things. And from the many companies that we've spoken to, we collected best practices of how to assess the venture readiness of a company. Then the second part, we see EDB's role really as a catalyst and enabler. We don't venture build, but we look at the different capability gaps that corporates might have in that journey. And one of them is usually going from the 0 to 1. When you have a new business idea, how do you go about validating it, finding your new customers? And it was true that we started our venture build team. So we have a bench strength of venture builders that work alongside entrepreneurs, founders at the very, very early stages of our startup. That's how we operated. Fast forward, we saw a growing momentum in Singapore. There are more than 50 corporates in our ecosystem today actively venture building. So what we decided to do was to launch the Corporate Venture Launchpad. The first inaugural run was last year, which we completed. We committed about $10 million to about 8 to 10 ventures that was built by that program. So we bring on board venture studios that work alongside corporates to start validate their new business idea, teach them the agile methodology, so on and so forth. Half of those ventures eventually went to the next stage of getting some funding to scale. That gave us some confidence, and more corporates came on board. So this year, just about 2 months ago, we launched 2.0. That's another 20 million commitment from our organization to enable corporates to build and scale ventures from Singapore.
Great, thank you, Christine. I feel like you've already kind of set the stage nicely for my next question, which was, as we think beyond the strategy, right, like actually operationalizing venture building and getting it off the ground. A lot of the venture leads I've talked to always compare it to raising a child or giving birth to and raising a child. It takes a village, basically, right? So what are especially as we have an audience of potential partners and fintechs who may be looking to get into the venture building process, what are almost gold standards with corporates that they should be looking for, or as they go into this and try to build that engagement, what should they be looking for corporates to extend to them to make this venture building process more efficient and successful?
So I think a few things. The first aspect of venture building is around solving for a problem. Solving this problem needs to address actual tangible problems that the corporate has. In our case, the corporate has. So I think really starting with problems that are relevant for the corporates that they want to work with. The other aspect I would say is actually convincing the ecosystem. So more and more, as we do venture building, we seek validation through externality, and that as a corporate alone will not be sufficient to validate the business model and the venture that we're solving for. So actually, partnering with the ecosystem, with the likes of a government agency like EDB that provides feedback, I would say, is important, but also provide the framework, the network with other corporates has been extremely useful for us. Although we haven't tangibly done something with EDB, it's something we're looking at. But I think just providing that ecosystem and from a friendly regulator is also something very important. And then the final aspect is, although in our case we look at 4 main themes, and we've launched actually 31 ventures on these themes. Having the ability to partner with other corporates, and in this case with ENGIE, for example, on a sustainable finance proposition, enables to bring our expertise, our understanding of the financial industry with their expertise of sustainability. And it's really the combination of all of this that we think creates a successful venture building.
It's almost like you had multiple questions in your question, but what I think makes it attractive for founders at ENGIE Factory is that we managed to create a sandbox within a corporate to allow founders, serial entrepreneurs, to actually come and launch their startup in a very independent way. So we've got very clear rules, which I think makes it successful. Like we've got a set investment fee for all the pre-seed and first investments that we make. We've got clear kind of equity models that apply to all the ventures. We've got a set process as well on doing the sprint and the first couple of months and validating solutions until we decide to go on for an investment. And so the fact that there is this clear path and clear rules, I think reassures a lot the founders. They know what they're coming in for. They know what they come and build with us. And so typically we see that we attract a lot of serial entrepreneurs who've been building ventures, exited, had successful exits, and now want to do something in the clean tech space. So that's where we add a lot of value. Or entrepreneurs who are ready to go on a first or second journey and want a little bit more of a accelerator-like support. And so we've got people in our team who are also helping with the incubation. We host them in a space. We have a dedicated space as well. And so that helps and connect with the ecosystem, of course.
Got it. So picking up on what you said around having a clean set or clear set of processes and guidelines, how do you actually think about, actually sitting where in your seats, how do you think about evaluating ventures when they bring ideas to you? What is kind of the processes and evaluation frameworks that you have?
Sure. So we've got a clear process right now, which keeps on changing. So I think that's an important point as well, for me, there is not one model. You would kill innovation if you just lock yourself up with one model for the next couple of years. So at the moment, we've got a clear sprint process for venture validation, which takes 3 to 5 months, where actually the entrepreneurs together with our team and some innovation consultant support as well, will run through problem identification, customer validation. That's the most important part of a model, is when we want to make sure that customers and the solution that we're building is solving a real problem. So we ask them to do 100+ interviews and come back with LOIs. And then once we've got all that validation, we usually only land in the solution after a couple of months, which could be a bit frustrating because everyone is like, I want to know what we're going to be building. But actually that comes in later. And that's when we're ready to put together a real investment pitch. We present that in front of the board, and that's when we decide basically whether we feel it's worth investing or not. And we talk about all the great sides of working with a corporate. There is also the downside of working with a corporate, which is the fact that obviously the corporates and the board, in our case, it's everyone from the board is 100% from ENGIE. They will always look at what's the strategy alignment, does it make sense for a business, beyond the fact that it's a cool, innovative startup. So that's also something to keep in mind, and we tell the founders from the early days. There is the ENGIE element as well to take into consideration.
I was gonna get Christine to kind of jump in here, because Caroline brought up a really interesting point around how the relationship with corporates or working with corporates can be challenging. And the perception of government is even slower than corporates in some ways. But I mean, I think Singapore is the exception to the rule. But again, Christine, your perspective on how some of those things are kind of expedited or accelerated, even though EDB is kind of a government organization.
We are set up as an offshoot, so that's great. But in our course of work, and in my team in particular, we look at co-investments with or without corporates into ventures that are set up here in Singapore, and our portfolio has been growing quite steadily over the years. And a couple of things that we look out for founders who are out here looking to involve corporate or wanting to work with corporate, know what they're really good for and know what is the value exchange. Usually there will be a strategic commercial angle, and generally my encouragement to the founders is if you can decouple the commercial and investment conversation first, because it's always easier to prove your value before talking about them pumping in some money. If not, then the money will drive where you should be taking your business to. But that aside, as an investment team, we do operate and look at quite a healthy volume of deal flow. The three things we look out for: one is typically how big is the market size, even before the sprint. I think for a venture that is starting out, you need to have multiple ways to pivot to be able to find that competitive edge. So how agile the team is, how big it is, and how agile the team is able to validate the ideas like what Caroline mentioned. Then the second one would be really what is that competitive advantage, right, of what you're trying to do. And typically that's where the sprint process comes in. You go in really deep to understand the customer segment and what is the job to be done. The last thing, which is highly subjective unfortunately, is really the founding team. 80% of what we underwrite on at very early stage is really the team. And that is more than just the ability of an individual. Very often for ventures that are spun out from corporates or there is a corporate involvement, we look at how the corporate align the incentives of the founding teams or the entrepreneurs. Are they part-time or full-time? Are they motivated to drive the performance of the venture, or they actually have a typical corporate pay structure which we don't really like, because we do believe that incentive alignment on day one is very important. And I think especially for venture ready corporates, they've gotten around it. And the last thing is always what I call sponsorship and of individuals who are prepared to support the ventures from within the corporate. We find it extremely important because they are the ones that tear down the friction to help access the competitive advantage that the corporate has to bring to bear to the venture. So these are the couple of things that we looked out for as a government partnering a corporate going into it.
Thank you. Harald, do you have anything?
Well, I think we spoke a little bit about methodology, and by the end of the day, we have different ways of evaluating, but it's more or less the same process. We start as an experiment, we validate through iterative process, through the various stages of validation. We will increase our funding and our support for these ventures. I just wanted to go back maybe to why venture building in a big corporate environment. What are the pros and cons? I would say pros, obviously, there's some element of support that the corporate can provide, which when you're a fintech out there, is complicated, right? Because you don't have that level of support. I think it was Christine who mentioned bureaucracy. It's true. I mean, you have an element of bureaucracy in a big corporate, and some elements of slowness of the big dinosaur that you need to understand and that you need to abide by. Maybe one element that we brought into our validation of our ventures, we really thought about who should be evaluating the business, from a team, from a product, from a solution, from a problem perspective. And so we introduced, we borrowed a concept from Pixar, which is called a brain trust. And the concept of the brain trust is actually almost like an investment committee, but that doesn't have the final investment decision, and that really supports the business purely from an opportunity perspective. And they don't get challenged because it's not their business that is going to be disrupted, but they see something in the team. They see something in the problem, and they see something in the solution that they think is really different and that is worth addressing. So we set up our brain trust. It's both internal and external stakeholders. Sometimes we can do a little bit of ad hoc brain trust, which we might do for when we bring expert in. But it's really, I would say that concept of how can we challenge ideas that come to us? How can we better them? And ultimately, how do we make them grow and have them be successful?
Thank you. I think I'm going to get flashed for the 10-minute sign, so I will squeeze one last question in before we open up for Q&A. This is around the talent that we kind of identify for the venture building pipeline. Especially when you have people come to you with ideas, and like we talked about it being like raising a child, so people feel very personally about their own ideas. How do you kind of identify the right leads for the ventures? It's not always the person who has the idea who's set up to lead for it. So how do you manage some of those talent decisions as well as kind of building the right team around the venture?
So I come from an entrepreneur background, and I would say it's not unique to the corporate background, to the corporate environment. The initial entrepreneur might be what we call a 0 to 1 person, which is someone who has great ideas, great energy. It has the ability to create something very disruptive, but that person will have certain limits and certain gaps that ultimately won't take the company beyond a certain level. So I would say initially that passion, that expertise of the initial entrepreneur is super important to kick off the venture. After a while, that person may no longer be the relevant person. It doesn't mean that they won't be involved. They still will be the founder, the co-founder, potentially owning some shares into the company, but we'll look for people who have demonstrated scaling and who are able to take the company from 10 to 100 or even beyond and becoming a unicorn. So that notion of talent, in our case, very often we start internal or with partners, and we'll scout for entrepreneurs who are able to scale the company once we've done a proper Series A, for example.
So in our case, we only start with external entrepreneurs, actually, although anyone from ENGIE can apply, but so far we haven't had entrepreneurs from ENGIE applying. The way that we've built the process is that we've got a sort of a dating phase where the entrepreneurs are recruited based on topics that we want to focus on. So we'll say we look for funders to build the next EV business, or now we recruited funders who are actually decarbonizing the mining sector in Australia, and a team who's focusing on like agriculture as well. And so they know they will come to ENGIE Factory to focus on a certain theme that they're interested in. They join in for a couple of months on a stipend, and that's where the dating phase with the team, the testing and all that starts until we decide to go for an investment proposal. Once we have a go for the investment, then it's incorporated as an external venture, and then it's their journey as a founder that's basically kicking off. Yeah, in most cases, asking them to be there with co-founders. We've got mostly teams of 2 or 3, so that de-risk a little bit the point where you said they need complementary skills as well. Sometimes the co-founder comes in a little bit later to bring that kind of complementary set of skills. So yeah, the model basically allowed us to have a lot of go no go, but also give them a lot of independence after the point of investment. They really need to grow it as independent ventures and not rely too much on the corporate.
Got it. Christine, anything to add or? Okay, great. I'm going to open it up for Q&A at this point. We have a couple of minutes.
Hi, my name is Paul Measurement. I work in Harald's team with ESG Venture Partners. Question for Christine. I mean, you have the benefit of seeing across all these different venture building efforts here and outside, and it's a very new field changing. What are some of the trends that you see? I mean, you talked about success factor, but you also see this model changing. And what would your suggestion for new companies starting?
A couple of things that we see over the last 3 years since we started. One, I think the hype factor has gone down, especially post the COVID. I think companies are very pressed for resources. There are other things. So the ones that are really serious about it, they're usually still in it. And then those who probably aren't, really there. So that's not really a trend, but it's really what we call that natural process of everyone getting up, trying to get on bandwagon and dropping off. And then for those that have been on it, I think they have been a lot more open, recognizing that it's going to be a journey. There will be parts that they don't do so well, and there will be parts that they can be stronger. So we definitely see a lot more collaboration between corporates, sometimes even in competing spaces. And we've been very deliberate at bringing that together. And the second one is the openness of the entrepreneurial ecosystem to engage with specific venture-ready companies. So I think the entrepreneurial ecosystem has also gotten a lot more educated through a lot of the effort and outreach that we've done to know, what to look out for when speaking with the corporates. And one of the evidence that I picked up is I personally placed about 3 founders in the ventures that we've invested. And they all came from our entrepreneurial talent. They usually have a very healthy appreciation of why a corporate needs things to be done in a certain way, but yet have a balance of agility and tenacity to push the envelope. And so far, fingers crossed, they're still there. They're treated well. Their incentives are aligned. So that's one. So
That's fine.
Yeah.
And maybe just to outline the fact that Singapore, as a destination for venture building, is an attractive place for corporates. So we actually, although our bank is headquartered in the UK, most of our venture building and venture capital team is based here in Singapore for a few reasons. I think, and when we set up companies like we have a few representing here, but we actually decide to have the holdco in most cases, the holding companies in Singapore for various reasons, for tax reasons, but also because we have the right ecosystem from an entrepreneur perspective, from a tax perspective, etc.
Can you guys hear me?
Yeah.
A question for Christine. I understand the vision for Singapore. I would love it if you can articulate a vision for what success looks like in the context of EDD venture building. Give me a 5-year vision, 10-year vision. Is it money deployed? Is it number of startups? Is it homegrown Singaporean startups? Is it Singaporean companies going international? What is it exactly?
We want the next batch of globally leading businesses to come out from the portfolio of new ventures that we seek today. That's our vision. We have numerical value, but I run the risk of not meeting them. So let me not commit. But of course, I think that was the genesis of why we started. We want that next Grab, the next tech company, the next digital bank to come out here from this effort. And I think we are doing something quite unique from what other
So that's very interesting. So follow-up question. So your conviction is the next winners, tech or otherwise winners, are going to be ventures that are corporate backed?
corporate back is a strong word, but enabled by corporate. Whether they are invested by, they are aided by, they are accelerated by corporates, we see corporate not dropping from the equation. And we've seen that coming, we have been able to deliver that value with our corporate partners through the ventures and found that right sweet spot to balance that agility and the corporate requirements.
Thank you. And I would say in our case, what we see as well is that providing that structure, providing that talent pool, providing that stability, and also all the network that Singapore can offer makes a big difference. It doesn't mean that the business of the ventures that we're launching is only in Singapore, but having that capability from Singapore is a big differentiator for us.
Just bringing a different perspective here. So Singapore is an amazing sandbox. You quickly know who's there, who can help you, access to capital, access to grants, government support, all that. We're even having discussions with EDB right now, and we see like our portfolio, which was incubated out of Singapore, is how do you make sure they scale up? And because you're in such a safe zone in Singapore as well, once you start getting out there, it's much more of a challenge. Oftentimes they go through a bit of a valley of death when they start scaling up in the Philippines or Malaysia or elsewhere. And so what's the role that we can all play? The corporate helps because we have offices in the region.
Yeah.
EDB is starting to also look at, okay, how can we help on the scale up side? But I think that's for that vision to unfold and for really the startup to succeed, that's an important factor that we still need to crack on our side at least.
Thank you. I'm just gonna see if we have time for one last question. Yes.
I got a question for Harald.
You can help.
Yeah.
Yes, question for Harald. Actually, I'm Ravi from Mandarin Capital. We do a lot of innovation as well. So we're also the innovation arm of Mandarin. So I just want to ask Harald, what is the key factors? What is the key success factors of driving the innovation and transforming the business model through venture building for Interpol?
So I think it starts with an experiment, right? You want to experiment a new way of doing business, but by the end of the day, they need to be financially driven. So you need to have financial KPIs. You need to have revenue KPIs. You need to have external validation. So external validation could be commercial, but it could be bringing other investors, other parties into the cap table that confirms you're onto something. So experimentation is great. You have to start somewhere, but having that financial validation is really important. And I wanted to go back to one of the things actually that Christine was saying at the beginning of the panel, getting that support top down from the very top of the organization is really important. In our case, we're now officially an identified business unit of Standard Chartered Bank. Our CEO, Bill Winters, is behind it, both supportive and challenging, but even our board, when we do our shareholder day, we talk about SC Ventures. We recently had a management meeting. We discussed about the investments and the venture building we've done. I mentioned we launched 31 ventures. We've invested in 23 portfolio companies. We calculated the net asset value of what we have built. Today, it's close to $1 billion. So it needs to be beyond just an experiment at some point.
I'm so sorry. I am getting the orchestra mute. Yes, exactly. So I was going to say we are happy to take any conversations outside. I just wanted to say thank you so much to our panelists for their really great perspectives. It's always hard being the first panel to go. And thank you to all of you for your time. And we look forward to the next panel then. Thank you.
Thanks,
Thank
Priya.
you.